Okay, next problem. The company purchases a truck that it plans to operate for 9,000 miles in year 1, 35,000 in year 2, 30,000 in year 3, and 12,000 in year 4. Which depreciation would be most appropriate for the company to use? Again, choose a method that would reflect the use of the asset. Of course, the deterioration of a truck would be dependent on the amount of mileage or usage class. So in this case, we can use the units of production method. Okay, so that's it. Imagine this will be the kind of question that will come up. Just imagine. Next, the company purchases a machine for similar problem, but this time we will be using double declining depreciation. Okay, so what do we do under double declining class? The first step is to always compute for the uh, depreciation rate. And under the double declining class, you get the depreciation rate using the straight line, and then you simply double it. How do we get the depreciation rate? It's 1 over the useful life. Again, very important. Depreciation rate is simply 1 over the useful life. Okay? So what's the useful life in this problem? 4 years. Okay, so okay. 1 over 4, that would be 25%. But since we are using double declining, you just double 25% and you will get 50%. So every year you will recognize depreciation equal to the 50% of the balance of the asset. Okay? Next is once you have the depreciation rate, just multiply that with the cost of the asset. What's the depreciation rate again? 50%. So where do we multiply the 50%? Do we multiply it with the 200 or 180? 200. Very important theory for declining balance class. Under the double declining balance, you will ignore salvage value in computing for your depreciation expense. Okay? So this is unique compared to the others wherein we will be ignoring the residual value. So for year 1, immediately multiply 50% by 200,000. Okay, because many students would forget that under the double declining method, residual value will be ignored in the computation. Okay, and then, so how much is 50% of 200? 100,000. That would be your depreciation expense for year 1. Okay, for year 2, how much would be the depreciation expense? Would it also be 100,000? The answer is no. Okay, because under the double declining balance method class, you multiply the depreciation rate with the declining balance. That's why it's called double declining balance class, because you will multiply the depreciation rate with the declining balance. What do we mean? After the first year, how much now is the carrying amount of the asset? If it was 200, then you have depreciation of 100. How much will be the balance of the asset now? 100. It is now this 100 that will be subject to the depreciation rate of 50%. So for year 2, you will multiply the 100,000 remaining balance by the depreciation rate of 50%. So how much then is the depreciation expense in year 2? It would be 50,000. The 50% depreciation rate is not a good example. Okay. You will get confused. What 100,000 are we talking about in year 2? Are we talking about the depreciation expense in year 1? No, we're talking about the remaining balance after year one. What 50,000 are we talking about in year two? When we go to year three, sorry, let's proceed to year three. How much will be the depreciation expense in year three? It would be 25,000. How did we get 25,000? By multiplying 50% by 50,000. What 50,000 are we talking about? Are we talking about the 50,000 depreciation expense in year two? No, we're talking about the remaining 50,000, the remaining balance of 50,000. Are you able to follow? Year one is 200, depreciation expense is 100. You will have a remaining balance of 100. So the balance of 100 will now be subject to the depreciation rate of 50%. So how much is the depreciation expense in year two? 50. You deduct 50 from the remaining 100, you will have a remaining 50 after year two. Year three, using the remaining 50 after year two, you will multiply that 50%, you would have 25,000 depreciation expense. Okay? How much then is the balance after 3 years? It would be 25,000. Okay? Year 4, what are we supposed to do? Multiply 50% by 25,000. And how much will you get? 12,500. And that is why that is not the answer. This is another thing you have to remember for the double declining balance method class. Especially if you are on the later years without, always check that the balance after your depreciation expense will not go below its residual value. And this is now where students get confused. I thought we are going to ignore. I thought we are going to ignore the depreciation. Sorry, we are going to ignore the residual value. You ignore it in the computation of your depreciation expense. But as to your total accumulated depreciation class, it should not happen that it would go beyond the depreciable cost. It should not happen that the remaining balance would be lesser than the residual value. Okay? So, what's the scenario? After year 3, the balance is 25. If we continue with our procedure class, the depreciation expense would be 12,500 for year 4. But what will happen if we follow that one? The balance now will just be 12,500. 25,000 minus 12,500. The remaining balance will be 12,500. Is that allowed? No, because the balance should not be lower than the residual value. So on year 4 class, the maximum depreciation expense that you can recognize will just be the difference between the 25 and the residual value. How much is the residual value in this problem? Is it 20? How much was the previous balance class? 25. So in this year, the maximum depreciation expense that you can recognize would only be 5,000. Okay, so always check class, always check. Especially if it's in the later years, make sure that your balance, your remaining balance, would not be lower than the residual value. But again, very important in computing for the depreciation expense, ignore residual value. When do you use residual value? Only in checking that your remaining balance will not be lower than the residual value. And that's why the answer in this problem would be 5,000. Because it should be a signal already to you, if it's using double declining, and the question is not on year 1 and year 2, the question is on later years, make sure to check that if you use the computation, that the remaining balance would not be lower than the residual value. Very important. This problem can be considered as tricky already. Next question here is, what is the amount of impairment loss that should be reported on the company's income statement prepared for the period ended June 30? It was the scenario here. Original cost is 800 and then accumulated depreciation is 300. Because I understand the confusion earlier between book value and carrying amount. In foreign books class, they use book value to what we refer to as our carrying amount. I am more comfortable with using carrying amount because that's the term that is commonly used in the standards class. But again, book value will just be the value of the asset or liability in the books. Okay, and normally that would represent your carrying amount. Carrying amount is the amount in which the account is carried in the books. Book value, the value of the account in the books. Carrying amount, the amount in which the account is carried in the books. So what's the first step, class? Because very important takeaway, we have two steps, the recoverability test and impairment loss test. What do we do under the recoverability test? We determine whether the asset is impaired, and how do we do that? Comparing the book value of the carrying amount with the undiscounted cash flows that is expected to be derived from the asset. Okay, let's start with our book value. How much is the book value? Original cost of 800 minus accumulated depreciation of 300. So book value would be 500. Next, comparing with what? Expected undiscounted cash flows, okay, which is 450. So book value is 500 and then undiscounted cash flows is 450. Is the asset impaired? Yes, because the carrying amount is greater. Plus, if the value in your books is greater than the amount you expect to recover from it, then that would mean the asset is impaired. If you will eventually recover less than the amount in which it is recorded, then that means the asset is impaired. What's the next step? Do we proceed to the second step? Yes, because the asset is impaired. What's the second step? Impairment loss test. What do we do under the impairment loss test? We determine the amount of impairment loss. And how do we do that? By comparing the book value with the fair value. So who is constant in the two steps, class? Book value. Okay, in the first step, compare book value with the undiscounted cash flows. In the second step, compare book value with the fair value. Okay, so how much is the book value again? It was 500. And the fair value is 375. So 500 minus 375, you would get 125. And that's it. Okay? Unlike in your financial accounting classes class, the computation of impairment would be very grandiose. Here it will be very straightforward as long as you follow the steps. Okay, next, the company purchasing machine 9 years ago for 300,000. When it purchased the machine, the company expected to use it for 12 years. After 9 years of use, the company sold the machine for 60,000 and recorded a loss of 19,000. Which of the following statements pertaining to the sale is correct? Plus, if you recorded a loss of 19 after you sold it by 60, sold it for 60, how much then must have been the book value? Since it's a loss class, which one is greater, the book value, the carrying amount, or the selling price? The book value. So if the book value is greater and you sold it for 60, which resulted in a loss of 19, how much do you think was the book value and the carrying amount class at the time of sale? 79,000. Okay, I hope everyone gets it right because many would get the opposite. They would instead deduct the 19. Okay, selling price is 60. If you have a loss of 19, that means the carrying amount is greater, so you add the 19 to get the carrying amount. So the carrying amount must be 79. If the carrying amount is 79, how much then must have been the accumulated depreciation? So what do you do? Remember, how do we solve for the book value? Original cost minus accumulated depreciation. If original cost is 300 and then the book value is 79, how much must have been the accumulated depreciation? 300 minus 79, that would give you 221, and that is letter C. Okay, of course, you cannot, if letter C is correct, then that means letter A must be incorrect. Let's try to go over the other choices. Again, it's not operating activities, but it will go to your investing. And then the decrease in your asset will not be 300, it will just be the amount of loss, the amount of 19,000. Next, the company purchases a machine for 56,000. What method will be used? Can we skip this one? Depreciation expense year 2. What fraction will be used? Useful life is 4. That means the denominator would be 10 and then numerator would be 3 because we are in the second year. And then, so 3 over 10 multiplied by 54. Why 54? We will deduct the residual value. How much is 54 times 3 over 10? 16,200. How is this problem different from the other problems? This time we're asked for the depreciation expense instead of the book value. Which one is easier? This one, because it ends here. Unlike if you're asked for the book value, you'll have further steps to undertake. Next, the company purchased 150 acres of land on the outer edge of a growing city. The company expects the value of this land to appreciate by 500,000 over the next 3 years. How would you expect the company to report the value of this land on their balance sheet? Obviously, class, it should only be at the historical cost. Okay. This one, I think this will come out in the exam. Once a recoverability test has been performed, how is loss of impairment calculated differently if the asset has a resale value versus if it does not have a resale value? The answer here would be the last choice. The loss of impairment for the asset with a resale value would be calculated based on the difference between the book value and the resale value. So the resale value would serve as your fair value. The loss of impairment for the asset without the resale value will be calculated based on the difference between the book value and the present value of the future cash flows. Plus, what's the first step? Recoverability test. What do we do there? Compare book value and the undiscounted cash flows. What's the second step? Impairment loss test. What do we do there? Compare book value and fair value. Okay? But what if you do not have a resale value, so you do not have any available fair value? What's the alternative? You get the present value of the undiscounted cash flows. Okay? Again, this is more of an exemption already. But I'm telling you, this might come up. What is one distinguishing feature of the straight line method for calculating depreciation? The second choice is obviously wrong. The same for the third choice. And the fourth choice, straight line is not required. So the best answer here is, it is simple to calculate. Next, which of the following is a distinguishing feature of the declining balance method of calculating depreciation? Go over the choices, class. They should not be difficult. Distinguishing feature of a declining balance method. What is described in letter A, the first choice? Straight line. What's described in the second choice? Units of production. The correct answer here is the third choice. A larger cost of depreciation is associated with the earlier years. Okay, next. On December 31, year 2, the related allowance for accumulated depreciation should have a balance. What are we trying to compare here? We're comparing so we'll have to do 3 plus. Okay, let's do the SYD first, class. How much would be the accumulated depreciation after 2 years? What's the useful life here? 8. What's the sum of down to 8. 8 times 9 divided by 2, 72, 36. Is it 36? Okay, so, and what fractions are we going to use? Is this 8? 8 and 7. So 8 plus 7 will give you 15. So 15 times, 15 over 36 multiplied by depreciable cost. How much is the depreciable cost? 120 minus 12, that would be 108. Plus, please provide me with the figures. 108 times 15 over 36, 45,000. So that would be the accumulated depreciation under the SYD. Let's compare it with straight line. If we use straight line, what do we do? Just divide 108 by 8. And how much will that give us? 30, 13, 13,500. And this is for 2 years. So 13,500 times 2, that will give you 27. How much was it under SYD class? 45 under SYD and then 27 under straight line. So how much is the difference? 18. Greater or lesser? Greater than under straight line. So that's the answer. That's not just all double declining na lang, guys. Okay, but what are you supposed to do during the exam? Make sure also, so if you already have the answer, don't need to solve really for double declining. Okay, so the answer here is the third choice. Do you want to, let's just proceed. If the company uses units of production, what will be the accumulated depreciation after year 2? What's the total estimated capacity plus? 300 in year 1, 1, 2 in year 2, 900 in year 3, 600 in year 4. So that would be 1527. Is this 3,000 plus? 3,000. And how much would be produced already by the first 2 years? 300 and 1, 2, that would be 15. Is that 15? And then 3,000, very easy, that would be 50%. Do we multiply 50% by 90? No, make sure to use the depreciable cost. How much is the depreciable cost? Depreciable cost would be 90 minus 6. So this would be 84. Multiply 84 by 50%. I hope everyone got where we got the 50% kasal. It's 300 units in year 1 plus 1,200 units in year 2 divided by the total capacity from year 1 to year 4 of 3,000. So 84,000 times 50% or times 15 divided by 3,000 will give you 42,000. Done in 10 seconds. Huh? Huh? Wala na eh. It's 84,000 times 50%. Next. Serious ba daw? Ibalik na to? Plus the total capacity is 3,000. How did we get 3,000? 300 in year 1, 1,200 in year 2, 900 in year 3, and 600 in year 4. If you're trying to look for the accumulated depreciation, you get the depreciation in year 1 and year 2. How do you solve for the depreciation in year 1? That would be 300 over 3,000. How do you get the depreciation expense in year 2? That would be 1,200 divided by 3,000. To what amount will you multiply those fractions? You multiply it with the depreciable cost. How much is the depreciable cost? 90 minus 6. That will give you 84. But instead of individually multiplying 84 by 300 over 3,000 and 1,200 by 3,000, you can just add 300 and 1, 2, and that will give you 1, 5. Okay, 1, 5 over 3,000 can be simplified into 50%. So you can just multiply 50% by 84,000. If you are asked how much is the book value or the carrying amount after year 2 class, what do? Just deduct 42 from 90, and that will give you 48,000. Next, impairment. What amount should the company record as restoration of previously recognized impairment loss in the current year's financial statements? Under US GAAP. Another important theory class. The answer here would be 0. There will be no reversal of impairment, which is different to what we have learned under the standard. Actually, the reversal of impairment is another source of tricky problems under your financial accounting classes. But here, under US GAAP, previously recognized impairments of fixed assets may not be recovered or reversed. Please make sure to take note of that theory. Next, the straight line depreciation method. Because the questions on straight line is really looking down on straight line depreciation method. The answer here again is that it is simple to apply. Next, which GAAP approved depreciation method generally allocates the larger cost in the earlier years? That would be your declining balance. Next, compared to other methods of calculating depreciation, how does the double declining balance method affect net income in the first year? Here, the answer would be the fourth choice. It usually results in the lowest net income. What are the class? Imagine this will come out class and you will not get it. What are the 2 steps to determine and measure impairment? First choice, recoverability test and impairment loss test. If you answer catastrophic class, then that's really catastrophic. Next, the company purchased a machine. Similar problem class. If the company sells the machine for 38, what is the impact on the financial statements? Okay, what happened? It was sold for 38. Okay, and then the accumulated depreciation is 170. That means at the time of sale, the book value or the carrying amount is 30, and it was sold for 38. Do you have a gain or a loss? Gain, you sell it more than the value in your books. So you have a gain of 8,000. Okay, so the answer would be the second choice. Obviously, the first choice is wrong. It should not be financing, but again, under investing. Which depreciation method generally results in the lowest net income for the first year? Basically, the same problem as the earlier ones. It would be your double declining balance. Next, after an impairment loss is recognized, the adjusted carrying amount of the intangible asset shall be its new accounting basis. Which of the following statements about subsequent reversal of a previously recognized impairment loss is correct? We've just mentioned this one. And imagine you will get this wrong again. The answer is that reversal is prohibited. It is prohibited. Next, a depreciable asset has an estimated 15% salvage value, under which the following methods properly applied would the accumulated depreciation equal the original cost of the end of the asset's estimated useful life. The accumulated depreciation equal the original cost. The answer would be plus. What did we say if you have a residual value? The carrying amount should not be lesser than the residual or salvage value. And if that's the case, then your accumulated depreciation should never equal the cost class. When will it happen, class, that your accumulated depreciation can equal the cost of the asset? Only if you do not have any salvage value. So if you have a salvage value, your accumulated depreciation should never equal the should never equal the original cost of the asset. So the answer here would be no and no. Yes, but what if there was no salvage value? What if there was no salvage value? What would have been the answer? Yes and no. Okay, under the double declining balance method, you will never reach zero plus. Okay, it's always a percentage of the previous balance plus. Next, what if any should be recorded as impairment? First test is recoverability test. What do we do? Book value and undiscounted. How much is the book value? Is it even? No, we have to solve for it. Original cost is 100 and then accumulated depreciation is 40. So your book value is 60. To what do we compare the 60? Compare it with the undiscounted cash flows, which is 45. Since the undiscounted cash flow, since the book value is greater, that means the asset is impaired. So does that mean the loss is the difference between 60 and 45? No, in determining the amount of loss, you proceed to the impairment loss test, which is done by comparing the book value and the fair value. How much again was the book value? 60. How much is the fair value? 25. And that would give you a difference of 35,000. And that is already your answer. The company double decline. What will be the depreciation expense in year 2? Okay, this should be very easy. Start with the depreciation rate. What's the useful life class? 4. How do you solve the depreciation rate? 1 over 4. That will give you 25%. And then multiply by 2 because this is double declining. Our depreciation rate would be 50%. For year 1, we multiply 50% by 100 or 90? 100 because under the double declining balance method, we ignore the residual value. So for year 1, the depreciation expense would be 50% of 100,000. That would give you 50,000. So your depreciation expense in year 1 is 50. The balance after year 1 would also be 50. Okay, for year 2, what do? You multiply the balance of 50 by the depreciation rate of 50%. So 50,000 times 50% will give you 25,000. And that is already the answer. Last problem. The company purchases a machine for 84,000. It plans to use the machine for 4 years and then sell it for 8,000. It expects to produce 500 units in year 1, so on and so forth. What will be the book value of the machine in year 2? Units of production class, okay? Let's solve first for our accumulated depreciation. What's the total capacity class? 500, 2, 3, 5, 1, 6,000. Everyone gets the 6,000. And then, ato lang isahon si 1 and 2 class, okay? Consumption in year 1 and year 2 is 2,300. So 2,300 divided by 6,000. 4,000 ra? Yun. Huh? Ay, it's not 2,800 eh. Ay, it's 800 lang. What's the lesson learned? Solve it slowly, just make sure but I'm sure the answer would not have come out also. So it's just, it's not 2,800 eh. It's, just don't commit those mistakes kasi very usik ka. So, 2,300 divided by 4,000 multiplied by 84 or some other amount? Some other amount. Okay, 84 minus 8, which is 76. So 76 times 2,300 divided by 4,000, 43,700. But that is not the answer because we are looking for the book value. So what we do, we deduct the 43,700 from the 84,000 and that will give you 40,300. Okay, because I'll discuss the investments problems with the other group.